Welcome back. Part of the government's intent on Friday is reflecting on ground. Indian markets are up on a day when global equities across the world are trading with deep cuts, though Indian markets have come off themselves. But FPIs with investments in the Indian equities and derivatives are breathing a sigh of relief. But are the measures announced or the promise of more support enough to sustain a long-term rally, or is today's gains just a relief rally of sorts which may fizzle out in the coming few days? Joining us now to answer this question is Basant Maheshwari, is a partner and co-founder at Basant Maheshwari Wealth Advisors. Basant, thanks very much for taking out the time. The last time we spoke, you said, we're suffering a cardiac arrest and paracetamols will not help. Do you think the FM used the defibrillator yesterday? On Friday.
No, I don't think that the FM has actually left the patient to die. He's been given some treatment, and broadly, if you look at the announcements on Friday, it was twin focused. So the first thing they tried to address was the stock market by removing the surcharge on the FPIs and other things. And the other, and more importantly, they tried to rectify the underlying economy. From October last year to this period, the real link failure in our economy was the NBFC crisis. So initially we thought, let everybody fail, because that's the mantra of capitalism, not realizing that the temple of capitalism, which is the Federal Reserve in the United States, did exactly the opposite of what the capitalism textbooks teach. In 2008, they went along and they tried to provide a backbone to almost all the defaulting agencies by picking up the toxic assets. So when there is a problem, you have to deal with the problem the way it has to be dealt with. Of course, it would have been great had all these been announced maybe last year and say about November, December, but then you cannot just sit back and say this could have happened or that could have happened. So coming back to it, I think the real important part about the message on Friday was that we're concerned about the economy and we are concerned about the markets. Like we always keep saying, if you're just concerned about the economy, the markets will take care of itself. But it's great to see that the minister is concerned about both the economy and also the market.
But the economy may still take some more time, Basant. It's not going to remedy itself in a hurry, considering we're in the midst of the global trade war, which now seems to be all hands off in terms of a truce. And that while we're not at the epicenter of the problems with the trade war, we're not going to remain unscathed from that.
Several things there. Economy will take time, yes. So if the economy, we assume, if we assume the economy to recover by say Feb or March next year, the rally should start from now, because the markets move 4 to 6 months ahead. If the economy is expected or assumed to improve from say June next year, then 3 more months of pain and struggle and consolidation and calling people up to say, kya lagta hai? Secondly, China's problem could be India's gain. We missed the manufacturing boom, the global manufacturing boom of the 90s, when China just took off and we were just focused on software and IT services, and beyond that we just couldn't think or assume to think. So if Trump is creating problems for American companies manufacturing in China, the government should set up a separate cell, a separate group of people who can just focus on how to get the Apples and the IBMs of the world, because they're all looking for a second space to supply goods back to the United States. So everybody is in a de-risking mode from China. If we don't capitalize on that right now, I think we will miss this part also. So as long as Trump keeps fighting with the Chinese, we should obviously, from the stock market perspective, it's bad to see the Dow fall 600 points. But why can't the government get a think tank of smart economists and people and say, okay, hey guys, if you can transfer your manufacturing facilities from China into India, you get a 20% corporate tax cut for a 20% corporate tax rate for the next 10 years. At least let us make that effort. Let us show the olive branch to the foreigners that you can do manufacturing also in India. Otherwise, we've just reduced to code coolies. We just write software codes and the products are made in the United States. So I think that opportunity, the minister, the Indian government should actually look at, and I think if we can capitalize on that, it's going to push us back into another league of growth. But if we do not do all that, then I think it's going to be a grind and back to 6% or 5.5% or 6.5%. So let's see what turns up.
Let's work with an assumption, Basant, good morning, that it is that 5.5%, 6%. What's not announced, let's not try and speculate. In light of what we know thus far, would you believe that Friday's moves restore India to a bit of a parity with regards to the other world markets, in that there are no big negative overhangs in terms of taxation and having a government which is not responding quickly enough? And therefore, is it business as usual? If the markets fall, global markets fall, our GDP doesn't improve, we fall, but it won't fall at a faster clip than the rest of the world.
No, I think the markets won't fall for two reasons. One, at least the markets have got a sense that there's a government which doesn't want the market to collapse. And secondly, and importantly, the FM has said that there are two more announcements to go. So unless those two announcements come, nobody would like to go short left, right, and center. But these are not enough to take us up to new highs or to pull the markets up into a new bull territory. These are just enough to hold back the collapse. So we're not going to collapse, hopefully, but you need a little more effort and a little more on the announcement front. So I think we'll just wait for that and see how it comes through.
Yeah, well, one will be around real estate and then maybe something more. The question though, Basant, is that in light of what the world is going through, is it prudent to even talk about or desire moving back to all-time highs in a hurry? It might be a labored process, but maybe that's the nature of the market. With the world doing what it is doing, we might not find the sentiment around equity markets per se strong enough to move to new highs. It might be great for Indian markets if they fall lower or lesser than what the rest of the world does.
Neeraj, in the markets, we get paid for sticking the neck out of the window than for keeping it buried between the pillow. I think the government has a plan here. They want to do big ticket asset monetization, disinvestment, and use that money for the social schemes. So they're also pushing on the central bank to give them back some of the excess reserves. And why can't the government think like an Indian promoter? Before the QIB, before the public issue, he provides you with the best of the results and then goes and sells some shares. So that's the only place where the government can get some money. So if the government wants to actually promote its social objectives, they will have to ensure that the markets remain fit and fine. If the government thinks that raising 50,000 crores by selling ONGC to GAIL and GAIL to HP and HP to BP, then I think even raising that 50,000 is a problem. So I think there is some plan, and the plan is that I'm not going to put out all my cards right now. Some of them are held with me, and real estate obviously is coming soon, maybe this week or next week. And because you cannot revive an economy by just going and buying cars and buses and trucks, you have to have a multiple pronged attack on the kind of slowdown that we are facing. So let's see what happens, but we don't want an all-time high. All we want is an economy that's functioning normally. And then good companies are going to hit all-time highs, because we don't buy Nifty, we don't buy the index. So if you've got a set of companies that are allowed to function without any external problem, I think that's half the battle won.
Basant, let's talk about what she's announced with regards to the auto space. Now, while obviously not a direct GST cut, but the fact that, you know, she's looking to spur some demand and probably looking at volumes picking up on the back of allowing government departments to replace old vehicles, additional depreciation from 15% to 30%. You know, all of these factors kept in mind, do you think, and the registration also being pushed back, the registration period being pushed back, do you think that this works?
This works, and but you know, auto is more of preponement and postponement. So people who didn't buy auto for the last 6 months, they'll go out and buy. People who have plans of buying auto for FY21 will try and push their purchases by March 2020. So auto is not something where you get a regular demand every day. It's not a ready consumable thing. So then what's going to happen is, from April, May, June, July next year, people are going to say auto numbers are coming down, and they will come down because everybody would have bought by March. So these things are good to give you a push, but they're not enough for you to go on a long drive. So I think the attempt is good, but it's not a long-term sustainable attempt. The long-term sustainable attempt would come when there is a full-pronged attack on all the sectors, attack in a positive sense, because there's a slowdown everywhere. Just by buying cars and vehicles, we cannot, of course the auto industry would be benefited, but you cannot assume the entire economy to start jumping up just because cars are being sold more.
No, she's also, with regards to the announcement on the GST refund, in a way sort of given the little bit of a lifeline to MSMEs also.
Obviously, that's the helpful part, but then from the stock market's perspective, we cannot play the MSME or the SME space. The only way to play those two spaces are through the NBFC route, which is going and giving credit to them, and that is why we think that the NBFCs, the top-notch ones, will be back in flavor, because that's the only link between a bank and the MSME and the SMEs. Of course, the PSU banks have been given money, but then the PSUs have been told that you go through a structured route, and of course the 30-day, the 60-day GST refund, all that is going to help. But my only thing is, if the economy revives in Jan, Feb next year, the markets would start discounting about it now. These measures aren't enough for the economy to go up. They are enough to stop the collapse, and we need a little more everywhere.
By the way, the markets are in the red now. So following the world, I think we are better off than the world for sure, but we are in the red. Just shows what Basant Maheshwari was trying to say, that not enough to really kickstart and jumpstart. Not too many people would have anticipated that, but just the pressure that the world markets are putting and the kind of fall that we've seen in some of these globally linked names are showing that. Incidentally, the auto names like Tata Motors and Maruti are also trading in the red. Just those handful of financials which are doing okay. Basant, are you, with whatever little you've seen on Friday, and I know social media was agog with clamor for some activity from the government. Now that some activity has happened, and maybe some more will happen, does it get you going and starting off in a staggered fashion, or otherwise even thinking of investing the kind of cash that you might have been sitting on? Or would you still wait for the rest of the two announcements to come in and wait for seeing what's happening to the trade war issues between US and China before deciding?
No, we remain fully invested, so we don't keep cash with us. Okay. But I don't think there's too much of a downside in the market from now on, especially after the intent of the government has been made public. But obviously, when you have Trump sounding out an international emergency alarm, a financial emergency alarm, he might use his powers to ask all American companies not to manufacture anything from China. The scare is quite visible and it's quite logical also, but we've seen Trump for at least 3 years. We know how he reacts. We know how he goes hot and cold. So I think the next blow from the American president would be a little cooler than what it was right now. He cannot do that, because unless he wants the US to get into a recession, and that's what exactly China wants. China wants the US to get into a recession, so Trump loses next year and China has somebody better to deal with. So there's a lot of cat and mouse and chess being played across there, but I think both sides understand what the other wants them to do.
All right, Basant, just one last word from you. Now, if you're trying to allocate money and look, going by the fact that if you don't expect the market to fall meaningfully from these levels and you start to make those allocations across the board, do you still continue to look at companies which have the possibility of gaining more market share rather than industry leaders within the pack? I think we spoke about this last time, where you said that the potential of a company to grow market share is something that you need to focus on, rather than if the company is already at a leading position in terms of market share.
No, absolutely. We wouldn't change sectors, we wouldn't change stocks just because the booster shots have come through. I think the companies that survived and did well when the economy was in a problem will do even far better, even when the economy just kind of stabilizes. So the theory remains the same: buy the best stocks in the sectors and look for growth.
Well, that says it all. Basant Maheshwari, it's always a pleasure getting your thoughts, not just about what's happened, but also about what can be. And thank you for that today as well.
Thank you.
Well, that's Basant Maheshwari with his thoughts. The markets have cooled off completely. That one pocket, though, Devina, that is probably helping out hold the index slightly higher is banks. Financials still seem to be doing okay. The rest, not much.
And not just the banks, I think it's more the PSU banking names which are holding steady ground. If you take a look at the PSU banking index right now, that still will have meaningful gains, about 2.5%. Not the peak, but still about 2.5% higher. The front loading of the 70,000 crore rupees of recapitalization for public sector banks was one among the many measures announced on Friday, along with the plan to link lending rates to an external benchmark like the repo rate. Let's discuss the potential impact of these measures with PV Bharati, the MD and CEO of Corporation Bank. Ms. Bharati, thanks very much for taking out the time. First up, your reaction to the announcements made by the Finance Minister on Friday, and how big a positive is the upfronting of the recapitalization of 70,000 crore rupees?
It is really a welcome direction, because normally we get the capital towards the end of the financial year. But this time when it is being front-loaded and it is meant for growth capital, it gives us a good amount of time to plan for the growth and make the optimum use of the capital that is being infused into the banks.
All right. What about credit offtake? Will that improve materially at a faster pace?
The credit takeoff is going. It is the demand that has to come. The supply is quite adequate. As of now, because of the various liquidity measures that have been taken, the supply side, we are quite comfortable. It is the credit offtake which has to happen. So we look forward that MSMEs which have been given a boost now, that their payments will be on time and there will be an increase in action from the MSME side that will give us a good opportunity to increase our credit growth.
Ma'am, at Corporation Bank, what is your current Tier 1 capital standing at? And from the bank's point of view, how much capital do you think you'll be expecting from the government?
See, as of now, we are adequately capitalized. As you know, last year itself, we have got around 9,000 crores plus another 2,000 earlier. So as of now, our CET1 and our CRAR both are very comfortable.
Sure. That is regulatory capital. What about growth capital? Do you think you'll be vying for any amount with regards to growth capital?
That we will have to look, because as it is also, the capital in our bank is more than 90%. So we will have to wait and see how the distribution is.
I get that, ma'am, but my point being with regards to whether or not you'll use it meaningfully from a growth capital standpoint.
Yeah, it will be used for growth capital, because we have already got the board approval for around the infusion of around 4,000 crores of capital. So we were planning to raise 2,000 crores for growth capital this year and another 2,000 crores by the beginning of next year. So if we are able to get the capital now, this 2,000 crores which we have planned for this year, that would really help us and help us to improve our credit growth right from now onwards.
All right. And what's the asset quality situation currently? Does it continue to remain a worry for you? And do you think, and will you be planning to use any of the allocation, if you get it, to provide for NPAs? And
see, as of now, we are quite adequately capitalized, since we have been able to bring down our NPA. If you see March 19, we were below 6%, and June also we will be able to maintain it below 6%. So we are having a continuous watch on the quality of assets that we have, and by that we should be in a position to keep the net NPA level at lower than 6%. We are targeting around the 5.5% this year. As of now, we are at around 5.71%. So with a recovery of around 5,000 crores that we are targeting for the year 1920, our NPA ratio should be quite comfortable and below the required norms of PCA.
Okay. With regards to the announcements of linking rates to external benchmarks and the transmission of that, how do you think that will shape up?
All the banks, as you know, we have already started working on that. We are working on our home loan and auto loan portfolio. So shortly we will be coming out with the rates for our home loan, which will be linked with the repo rate. We are coming out with the repo linked rate only for the home loans immediately. And later, as we see it stabilizing and picking up, we will be thinking of introducing the rate for the other products also.
All right. And considering that the FM highlighted that so far only 30 basis points has been transmitted to the system from the rate cuts that the RBI has announced, do you see transmission happening at a faster clip?
When the basic rate is getting linked to the external benchmark, no? So as and when the repo rate moves, when the repo rate is coming down, automatically it will be passed on to the customers. So the rate will be faster in the products where we are offering with repo linked rate.
All right, Ms. Bharti, we leave it at that. Thank you so very much for joining us this morning. That's the management at Corporation Bank saying that this is definitely a welcome move, but they are well capitalized nonetheless.
Well, the markets, as we've now discussed for the last 15-20 odd minutes, bogged down by what's happening to metals.
Damn squib.
Damn squib, yes, indeed. Bogged down what's happening to metals. Some private banks as well. IndianOpen Bank, for example, down another couple of percentage points. I don't know if the markets were expecting a magic wand or whatever, but
it looked like it, right?
Some
because
measures were decent.
It was something that it was most anticipated, and you know, when media suggests that there is an announcement coming about and the market runs up 2%, and the announcement actually happens, you would anticipate the markets to go up, right? Because that's what the street is wanting, and that's what's given to you.
Yeah, I just think it's probably what's happened on Friday on the globe, which is probably leading to this as well. Else, if the world would have been a happy place, maybe we could have done a bit more. But nevertheless, we take it one day at a time for now, or maybe one morning at a time. For now, the markets are lying absolutely flat. Maybe some individual stocks should be the focus of attention. Watch out for metals. They are really correcting thick and fast. But we'll wrap it up on this leg of Indian Open from Devina and me and the team that put this show together. Thank you so much for watching. The FNO show takes forward the action on the other side.